backed by Ethereum co founder Joseph Lubin, saw its stock slide on Friday morning following the release of its second quarter earnings report. Shares dropped around 10%, falling from $23.49 at Thursday's close to $21.15 by mid morning Friday, as investors weighed the company's steep reported loss against the rising value of its Ethereum holdings. SharpLink disclosed a $103 million net loss for the quarter, though management emphasized that nearly $87.8 million of that was a non-cash impairment charge tied to generally accepted accounting principles GAAP. Under GAAP rules, companies must record digital assets at their lowest market price during the reporting period. For Q2, that was Ethereum's dip to $2,300, far below its current trading levels. That accounting rule has created a sharp disconnect between SharpLink's reported numbers and the market reality. Ethereum has rallied strongly in recent weeks, climbing above $4,500. At those levels, SharpLink's reported 728,804 ETH stash is worth over $3.3 billion, underscoring its status as one of the largest corporate holders of Ethereum in the world. The company also reported a 98% increase in its ETH concentration ratio, a metric that measures how much Ethereum the company holds per 1,000 potential shares, including actual shares, and all possible dilutive securities such as warrants, options, RSUs, and pre-funded warrants. This suggests that even as the potential share count grows, SharpLink is aggressively adding to its Ethereum reserves, creating a stronger per share backing of ETH. Another key highlight: nearly all of SharpLink's ETH has been staked. According to the filing, over 99% of its treasury is generating staking rewards, producing 1,326 ETH, around $6 million at current prices, in yield to date. This not only compounds the company's ETH holdings, but also provides a source of recurring income beyond its core operations. Joseph Lubin, Ethereum co founder and SharpLink's chairman of the board, framed the strategy as visionary, stating, Ethereum is the trust layer for the decentralized economy, and SharpLink's aggressive accumulation, staking, and strategic management of ETH set it apart from any other public company in the market. SharpLink is actively compounding value for our fellow stockholders through yield generation and intelligent capital deployment. The broader backdrop is equally significant. The cumulative market cap of public companies holding ETH on their balance sheets has now surpassed $10 billion, according to the block. This reflects a growing trend of ETH treasury firms that are seeking to replicate the Bitcoin playbook pioneered by MicroStrategy, but with Ethereum as the asset of choice. For investors, the debate now revolves around whether SBET stock is undervalued given the size of its ETH holdings and yield generation, or if risks like dilution, crypto volatility, and GAAP accounting headwinds could weigh on the share price further. With Ethereum climbing and crypto-friendly legislation under review in Congress, SBET remains one of the most closely watched equities tied to the digital asset space.
Okay, so let's get back to what's going on. Okay, so as of the close of Friday's trading session, the extrapolation was saying that we're going to get a distributive contraction on the stock going all the way towards at least Monday, the 25th of August. After that, we might get a bid to bounce. In terms of projections, we have 17.74, 15.14, 13.53. currently in play, but we also know very well that the stock has printed very higher prices, far more, far higher prices before now. We have 39.20 as of the 24th of July. I think on the daily chart, we'll see something different, I believe. So selling pressure is very high, but we have robust second derivatives on its 10 and 21 period moving average on this 4-hour chart, indicating that maybe there's a very good support. Maybe weakness is not may have gone away, given the 15% it lost in Friday's trading session. Maybe that might be the end of weakness for some time. Maybe it may have found a bottom, or the selling pressure has just cooled. It's no longer as strong as it was before. Let's see. Yeah, we know very well that this is let's see now. This is what $78 or thereabout. So there's ample room to the upside. We have here 48.85, 60.98, 68.47, and indeed very, very, very seriously low prices being extrapolated. Okay, so we have the extrapolation is saying on this daily chart that we are going to have going to a distributive contraction going all the way towards Friday, the 12th of September. And after that, we might get a bounce. But like every other thing, nothing is equal. Nothing is guaranteed. There's no guarantee that this extrapolation will play out exactly like this. So price pressure, momentum, everything is positive apart from what we have on the 21-day moving average. Severely bearish 21-day moving average and a bearish first derivative. I think what it's indicating may be um, yeah, it's either that the 10-day moving average had very high value before now, and given this weakness, it still hasn't been able to get through all the momentum, all the buying pressure ran up, and as such, is still strongly bullish amid a weakness of around 15%. So yeah, we've got the news. We've got the news. We could also just try and apply the market grid and to just give us an impression of the sort of prices it can print. It has the capability of printing at least in the very short term. Let's see. Let's see. The contraction has been in effect. Has been this expansion that happened as of the end of May. That it's been contracted still, and it's still very much in effect. And we also had another attempt again on 16th of July. So yeah, volatility has been contracted. So we have a range of between 21.22 to 25.76. It's closed yesterday at 19.88, so it's trading right outside of its price channel on this daily chart, indicating that it's either weakness will continue or the market grid will adjust to accommodate it. One of those issues. And by some indications, it may be indicating a buy. It may be indicating a buy because it's it is outside of the channel, but it's never always a good strategy, never always the best. Even though it's trading outside of the grid or the channel, naturally you would say naturally the stock has to be trading within the channel. But if it's trading outside of it, especially below it, it does signal the buy, but never really works out well. Never always works out well. So let's just see how things go. Let's see how things go. Okay, let me reapply the price pressure momentum too. Okay, we could just quickly glance at the weekly chart and see what's going on. On the weekly chart, what do we have? No, it's okay. We have some really ambitious price here, 106.02, and then $16 as well. Yeah, so extrapolation is saying that it's just going to be a neutral. It's going to be a contraction going all the way towards Monday the 2nd of March. Sorry, Monday the 23rd of February next year. You can't rely on this as such. There's no guarantee that it will turn out exactly like that. Just yeah, let's see how things go. Like I said, the contraction of the expansion is very much in effect. That's what we are dealing with right now. So it's it may continue for some time. I don't exactly know, but indeed, at some point things might change. So thank you very much for watching this video.